Hello everyone, welcome to EduTap and welcome to Finance 360-degree session. So in today's session, we are going to discuss the Free AI Committee report, in which we are going to discuss the 7 sutras, the 6 pillars as well as the 26 recommendations, okay? And this report or this news article is very important from your examination point of view, from the objective part of the examination as well as descriptive part of the examination, as there is a lot of focus that is given to the artificial intelligence by the regulators, okay? So this topic becomes very important from your examination point of view, and in today's session we are going to have the detailed understanding of this Free AI Committee report and the important facts, the important points that are given in this report. So this session is going to be very important for all of you. But first of all, give me a thumbs up if I'm clearly audible and visible and if everything is fine. So today we are going to have the coverage of this report in a very detailed manner so that you have the understanding that what are the important points of this report as well as how you can use the points, okay? So, yes. So now the report has been released. The RBI had notified that a committee has been established for the Free AI, and now the committee has given the report, okay? And this report today we are going to have the understanding. But before that, do subscribe to the YouTube channel of EduTap so that you continue getting the relevant videos, as well as do join the Telegram channel where you will get the PDF of the session, and the link for the Telegram channel is provided in the description box below, okay? So let's get started. The Free AI Committee report. So Free AI is the framework for responsible and ethical enablement of artificial intelligence. So basically this committee, there was a committee that was established by the Reserve Bank of India so that the committee can develop the framework for the responsible and ethical enablement of the artificial intelligence, because the artificial intelligence has become very important in today's world, in the today's time. But as well, the artificial intelligence has many of the risks involved also. So that's why we want that the responsible and ethical enablement of artificial intelligence happens in the financial sector of our country, okay? So for the development of the framework, the committee was established. So in order to further responsible innovation in the artificial intelligence, while at the same time ensuring that the consumer interests are protected. That means the RBI wanted that the innovation should happen in the artificial intelligence, because the artificial intelligence, it can further the financial inclusion in the country, it can further the financial development of the financial sector. So the RBI wants that the innovation should happen in the artificial intelligence that can boost the financial sector in our country, that can make the processes faster as well as cost efficient, okay? So the innovation should happen in the artificial intelligence, but at the same time, we have to take care of the risk involved in the artificial intelligence also, so that the consumers are protected. So the Reserve Bank of India, wanting to have the responsible innovation in the AI while at the same time ensuring that the consumer interests are protected, the Reserve Bank of India established the committee to develop the Free AI, that is the framework for the responsible and ethical enablement of the artificial intelligence. So the RBI established the committee, and this decision of establishing the committee was announced in the Statement on Development and Regulatory Policies dated December 6, 2024. So here you can see that the chairperson of the committee was Dr. Pushpak Bhattacharya, and the member secretary of the committee was Shri Suvendu Pati. Okay, so we have discussed this, that the chairperson of the committee for the Free AI, for the framework for the responsible and ethical enablement of artificial intelligence, the chairperson of the committee was Dr. Pushpak Bhattacharya. Okay, now the committee was established. Now the committee has released its report in August 2025, and the Free AI vision, or the vision of this framework for the artificial intelligence, is that a financial ecosystem where the encouragement is given of innovation that is in harmony with the mitigation of risk. That means we want to encourage the innovations in the artificial intelligence domain. At the same time, we have to reduce the risk, or we have to mitigate the risk. It's not like that the artificial intelligence is very risky. You know that the artificial intelligence, the data theft can happen, the data poisoning can happen. That means the training data can be manipulated. So the whole AI data is biased, or AI data or the whole AI model is manipulated. The data theft can happen. Okay, so the artificial intelligence, there is a lot of risk that is involved with the artificial intelligence, but at the same time, the artificial intelligence is also very valuable because it can boost the financial sector, it can make the processes more faster. Okay, so basically AI sector, we want to boost the AI sector, but at the same time we recognize the risk. The external attacks can happen in the AI domain, in the AI models. The data theft can happen, the data poisoning can happen, where the data is manipulated so that the AI models work in some bad manner. Okay, so we recognize the risk. That's why the free AI vision, or the vision of this framework, is to have the financial ecosystem where the encouragement is given to the innovations that is in harmony with the mitigation of risk, where we want to mitigate the risk. Now, after extensive deliberation is done by the committee has formulated the 7 sutras that represent the core principle that guide the AI adoption in the financial sector in India. So when the AI adoption is happening, when the AI innovation happens, these 7 sutras have to be kept in mind, because these are the core principles that is given by the committee. Okay, so what are the 7 principles? The trust is the foundation. Okay, that means trust is non-negotiable. The customers, the regulators, they should be able to trust the AI models. Okay, so trust is non-negotiable and should remain uncompromised. It's not like that we want to do innovation, we want to develop the AI models, so we are compromising the trust of the consumers and the regulators. That should not happen. Okay, trust is non-negotiable. It should not be compromised in any case scenario. Next is people first. AI should augment, it should benefit the human judgment, the human decision making, but human judgment is always above the AI, or the people are always above the AI. It's not like that AI is saying kill everyone, so that we should do. No, the AI can give wrong decisions, or AI do not have feelings right now, right? So they can give decisions that is unreasonable sometimes. So AI should augment the human decision making, but they should not be above the human judgment, or they should not be above the citizens of the country. So AI should always be below the human judgment, and AI should always be below the citizen of the country. So people first, AI should augment, it should benefit the human decision making, but it should be below the human judgment and the citizen interest. Innovation over restraint. So basically it is said that we are trying to boost the innovation in the country, in the AI ecosystem, in the AI domain. We want to boost the innovation, and for that we will have the regulations that are easier to comprehend and easier to follow. Okay, so we will not follow very strict regulations for the development of the AI models and for the development of AI in the financial ecosystem. So innovation over restraint. Foster responsible innovation with purpose. So innovation, AI models should be developed. There should be innovation that should happen in the AI domain, and the AI model should be developed with a purpose that is furthering the financial ecosystem of the country, that is boosting the financial ecosystem of the country, that is boosting the process and making the processes faster at lower cost. So AI should be developed, or the AI models should be developed with a purpose. Okay, if you are developing an AI model, that should have a purpose that is beneficial for the whole of the country, or for the country. So innovation should happen, and innovation is boosted over the restraint. The regulations will be there, but the regulations will be very flexible in nature, or the regulations will be lesser. Okay, fairness and equity. So AI outcomes or AI models should be fair and non-discriminatory. Especially they should be working towards the betterment of the underserved or unserved areas that are not served by the financial sector. So we should try to develop such AI models that are benefiting the underserved or unserved areas, okay, in the banking sector, in the financial sector. Accountability. So accountability rests with the entities deploying the AI, that are using the AI. So responsibility is resting with such entities. Okay, understandable by design. So the AI model should be understandable by design, because when they are understandable, then only the people will trust the AI ecosystem. Okay, so the AI models should be transparent, or they should be understandable by design. Ensure explainability for trust. So the AI models should be explainable, should be transparent, so that trust can be developed on the AI models by the people. Safety, resilience and sustainability. So AI system should be secure, resilient and energy efficient. So these are the 7 sutras, these are the 7 core principles to guide the AI adoption in the financial sector. These 7 sutras, they guide the AI innovation in the country. Any confusion, anyone? Any confusion anyone has? All clear? The 7 sutras. Now we are going to discuss the 6. Okay. So let's continue now. Using the sutras as guidance, the committee recommends an approach. So using the sutras as the guidance, using the 7 sutras, the core principles as guidance, the committee recommends an approach that fosters innovation. So basically the idea for this report is that we want to have the innovation. We want to have the innovation while mitigating the risk. That is also the target. Okay, innovation is the target and mitigating the risk, that is the target. Okay, so there are 6 pillars that are developed. 3 pillars are under the innovation and 3 pillars are under the mitigation of risk. Okay, so basically under using these 7 sutras as guidance, the committee recommends an approach that fosters the innovation and mitigates the risk, treating these two seemingly competing objectives as complementary. So innovation, if innovation is happening, the risk will also increase, but the committee has said with the increased innovation, we are trying to mitigate the risk, we are trying to reduce the risk, and for this, for the innovation in the AI models, for the innovation in AI, we have developed 3 principles, and for mitigating the risk, we have developed 3 principles. Okay, now these two are competing objectives, but we are making it complementary. Okay, so that must be this is achieved. Now this innovation and mitigating the risk, it is achieved through 6 principles, 6 strategic pillars that address the dimension of innovation enablement as well as risk mitigation. So basically there are 6 pillars that are developed, 3 pillars for innovation and 3 pillars for mitigating the risk, so that the innovation enablement can happen and the risk can be mitigated. So using the innovation enablement, under the innovation enablement, there are 3 pillars, that is infrastructure, policy and capacity. So innovations should happen. For the innovation in the AI domain, there should be infrastructure. For innovation, there should be infrastructure, right? There should be policy, that is the RBI should have a proper policy for the AI development or AI innovation, as well as there should be capacity for the innovation to happen in the AI ecosystem or in the AI domain. For the mitigating of risk, for mitigation of risk, there should be proper governance, good governance. There should be protection that should be provided to the customers, as well as there should be assurance, that is the audits should happen and such. So basically under the innovation, there are 3 pillars, that is infrastructure, capacity and your infrastructure, capacity and the policy. Okay, and the policy. Under the mitigation of risk, there are 3 pillars again, that is your assurance, governance and protection. So these are the 3 pillars under the mitigation of risk. Okay, now see, under these 6 pillars, there are 26 recommendations that are given. Now you have to remember the name of the recommendation or the title of the recommendation, so that if a question comes that these recommendations, are they under the capacity or are they under the protection or are they under the assurance? So you should be able to answer that which recommendations are under the infrastructure, which are under the capacity and such. Okay, so infrastructure, by the name itself, you should understand that here the infrastructure is being developed for the AI, for the artificial intelligence. So financial sector data infrastructure, the data infrastructure is there. AI innovation sandbox is the system through which testing can happen and such. Okay, we will discuss about it more. We will discuss all these recommendations one by one, but try to understand that these are the 26 recommendations under the different heads, under the different strategic pillars. Okay, so let's understand them one by one. Then at the end, I will tell you that how you can identify that which recommendation is under which pillar. Okay, so first of all, starting with innovation enablement framework. So under the innovation enablement, there are 3 pillars, starting with the infrastructure pillar. So financial sector data infrastructure, a high quality financial sector data infrastructure should be established. So basically build a trusted data backbone for the AI in finance, because for the artificial intelligence to work, the data is very important. If the data is of high quality, if the data is of good quality, then the AI models can be trained on the good quality data, and the AI models, they learn through the data only. So for the AI models to be good, they are unbiased, for the AI models to be unbiased, for the AI models to be fair, the data should be good. Okay, so high quality data infrastructure should be established as a digital public infrastructure to help build trustworthy AI models, because the AI models, they are trained on data. If the data is good, if the data is trustworthy, then only the AI models will be trustworthy, then only the AI models will be fair and transparent and such. Okay, so it may be integrated, so the data the digital public infrastructure that consists of the data, they must be integrated with the AI Kosh India data sets platform established under the India AI mission. Okay, so this is the basic idea, that the trusted data should be there to train the AI models and for the trustworthy AI models. So build a trusted data backbone for the AI in financial sector. Next is AI innovation sandbox. So basically a sandbox has to be developed under the Reserve Bank of India, where the testing and innovation can happen of the AI models or the AI ecosystem. So an AI innovation sandbox for the financial sector should be established to enable the regulated entities, the financial technology companies and other innovators to develop AI-driven solution, algorithms and models in a secure and controlled environment. So sandbox, I hope you know that sandbox, the regulatory sandbox or the AI innovation sandbox here. So the sandbox is the domain that is created by the Reserve Bank of India, where the testing or the development can happen of the innovation. Okay, under the regulatory eyes, under the regulatory domain. Okay, so this is the idea. So create a test bed where the testing can happen, where the development of innovation can happen for the AI innovation in finance. So AI innovation sandbox should be developed. So this is the sandbox where the AI models or the AI algorithms will be tested, will be developed under the regulatory eyes, under the regulatory domain of the Reserve Bank of India. Okay, so this is the AI innovation sandbox that has to be developed. Next is incentives and funding support. So appropriate. So here infrastructure is being developed. So in the infrastructure, data infrastructure, AI innovation sandbox, then incentives and funding support has to be given by the Reserve Bank of India, so that the smaller entities, they are also able to use the AI, or they are also able to develop the AI. So provide the funding and infrastructure to make the AI adoption easier, especially for the smaller players, because the smaller players, they do not have enough resources to develop their own AI models or to develop their own AI algorithms. So they need the funding, they need the help of the regulator of the Reserve Bank of India or the other players. So appropriate incentive structure and infrastructure must be put in place to encourage inclusive and equitable AI usage, so that the smaller entities are also able to use the AI ecosystem. Because let's say only big entities are using the AI ecosystem and they are making their processes faster and smoother. The smaller entities, they will not be able to have the AI ecosystem, or they will not be able to have the AI to work for them. So smaller entities, they will not be able to compete with larger entities, and the smaller entities will start closing down slowly and slowly. So the competition will reduce in the financial market, and this RBI do not want. So RBI is helping the smaller entities to provide the funding to the smaller entities and such, so that they can also have the AI ecosystem and the AI usage can become more inclusive and equitable. Okay, so this is the basic idea. So the Reserve Bank of India may consider allocating a fund for setting up the data or compute infrastructure. So basically the 26 recommendations are given by the committee to the Reserve Bank of India. Now how many of the recommendations the RBI will agree with, that is a different topic, but here the 26 recommendations are being given, in which one is that RBI should provide the incentive and funding support. Indigenous financial sector specific AI models. So basically it is saying that we have to build a homegrown, so there is so in India we have to build the homegrown AI models. Okay, so we should not be dependent on the AI models that is developed by the other countries. So basically this point is saying indigenous financial sector specific AI models. So we should not be dependent on the AI models developed by US or the AI models that is developed by China and such. We should develop our homegrown AI models. So indigenous financial sector specific AI models, indigenous AI models including the large language models, small language models and such, tailored specifically for the financial sector needs of India, that is developed and offered as a public good in India. So build homegrown AI models for finance accessible to all. Okay, so build homegrown AI models for the financial sector. Next is integrating AI with DPI. DPI is the digital public infrastructure, such as your UPI, the Aadhaar card system, as well as the DigiLocker. They are the digital public infrastructure that is provided to the public. So integrating the AI with the digital public infrastructure and enabling framework should be established to integrate the artificial intelligence with the digital public infrastructure, with the UPI system, with the Aadhaar card system, or with the DigiLocker and such, with DPI, in order to accelerate the delivery of inclusive, affordable and financial services at scale. So basically at scale. If we want DigiLocker to reach, how many of you uses DigiLocker, or how many of your parents uses DigiLocker, or how many of the grandparents are using the DigiLocker, or how many of the rural areas are using the DigiLocker? Not many. So integrate the AI with the DPI so that the digital payment infrastructure becomes more inclusive, or it becomes more affordable, and it becomes more used by the people. Okay, so basically integrate the AI with the digital public infrastructure so that through the AI it can be recognized that which households are not using the digital public infrastructure, and we can reach out to such households, and we can make the digital public infrastructure reach to such households. Okay, so this is the basic idea. Next is policy pillars. So in the infrastructure we have understood. So basically you can understand that infrastructure means data infrastructure has to be developed, AI innovation sandbox has to be developed, so that there is a sandbox under the Reserve Bank of India. The innovators can innovate, they can in the testing environment, in the live testing environment, in the live environment, they can develop the AI models, they can develop and test the AI models and algorithms. Then incentive and funding has to be provided. Indigenous financial sector specific AI models have to be developed. Integrate the AI with the DPI. Next is policy pillar. Now who can develop the policy? The regulators can develop the policy, right? So it is the regulators that develop the policy. So the policy pillars will always talk about the regulator, the Reserve Bank of India here, or the other regulators. So adaptive and enabling policies, the regulators should periodically undertake an assessment of existing policies and legal frameworks to ensure they are effectively enable the AI driven innovations as well as address the AI specific risk. So right now, how many of the legal frameworks are there for the mitigating the risk of the AI? How many of the legal frameworks are there? How many of the regulations and rules are there for the AI ecosystem? Not many, because AI is just in the developing phase and it is just developing. So the Reserve Bank of India is saying that regulators should look after the development of the AI, the innovation that is happening in the AI, as well as the regulators should make like separate regulations, or regulators should have the policies for mitigating the risk in the AI, because AI is slowly developing and you don't know that when the AI will be fully merged in the financial sector. So the committee has recommended the Reserve Bank of India that the regulators should periodically undertake the assessment of the innovation that is happening in the AI and should have the legal framework or the legal regulation should be there to ensure they effectively enable the AI innovation but address the AI specific risk also. So basically keep regulations updated to both support the AI growth and manage its risk. So we have to update our regulations so that they are from the AI perspective also. Build a strong, flexible policy. Now, flexible policy is required in the AI domain because the AI is continuously developing and innovation is still happening in AI. So we still do not know that how AI can function in the future. So build a strong but flexible policy for safe and responsible AI use in finance. Okay. So I have provided for each and every recommendation, I have provided a short point so that you can revise through that. Okay. So basically here it is said that the regulators should develop a comprehensive AI policy framework for the financial sector that is focusing on the 7 sutras to provide flexible, forward-looking guidance for AI innovation, because the innovation is still happening. So that's why still we do not know that how much the AI can develop in the future. So guidance has to be provided for the AI innovation, adoption and risk mitigation. RBI may consider issuing consolidated AI guidance so that at one place a single point of reference could be there for the regulated entities, for the banks, for the NBFCs. The consolidated AI guidance could be provided by the Reserve Bank of India so that the regulated entities have a single point of reference. Okay, that how they can have the responsible designing, development and deployment of the AI solution. So the RBI can provide a consolidated AI guidance, a single point of reference for the regulated entities who can have the responsible design, development and deployment of the AI. Next is enabling AI-based affirmative action. So AI should be developed in such a manner that is leading to affirmative action in the country, that is leading to more inclusiveness in the country and such. Okay, so regulators should encourage AI-driven innovation that accelerate the financial inclusion of the underserved or unserved areas. So AI should be developed that is leading to affirmative and good actions in the country, that is increasing the financial inclusion in the country by lowering and there should be affirmative actions, that is by lowering the compliance expectations the regulator. Now what regulators can do? If AI is being developed in such a manner that is leading to financial inclusion, in this what regulators can do? Regulators can decrease or lower the compliance expectation. Because in the AI models, if we want to develop the AI models, the compliance should be easier. Okay, so compliance expectations can be lowered as far as possible without compromising with the basic safeguards of the customers and such. Okay, so basically the regulators, they should enable the AI-based affirmative action. That is, the AI is being developed for more financial inclusion in the country. So the regulators should lower the compliance expectations and the strict regulations have to be decreased as far as possible without compromising the basic safeguards. So basically, regulation should be updated, but the regulations should be flexible so that responsible AI can be developed as well as used. So use the AI to improve the financial access for all and ease rules to encourage this while still protecting the users. So regulation should not be strict. Regulation should not be constricting or restricting the AI development. Regulation should be boosting the innovation while mitigating the risk. That is the idea. Okay, next is AI liability framework. So next policy pillar is AI liability framework. So since AI systems are, AI system. Now, if you are giving a prompt, do you know that always the AI will give you same answer? If you are giving the same prompt, even then the AI might give you separate answers. So AI is probabilistic. It is giving you probable answers. It is not deterministic. We cannot determine that it will give this single answer if we are giving the prompt. At different point of time, the AI can give you different answers. So it has to be recognized by the regulators that the AI systems are probabilistic. They are not deterministic. Regulators should adopt a graded liability framework that encourages responsible innovation, while regulated entities must continue to remain liable for any loss. So basically, this recommendation is saying that the AI models, they are probabilistic, they are probable in nature, they are not deterministic. So if any mistake happens through the AI, let's say some data leak is happening, so it has to be understood that maybe the regulated entity is not at fault here because the AI was developed by the regulated entity to not leak the data, but still the AI was some prompt was given and the AI released some of the data. So here it has to be recognized that the regulated entity might not be at fault. So the Reserve Bank of India should tolerate, the supervisory stance should be tolerate, that RBI should tolerate the first mistake. But if the mistake is happening again and again, that should not be tolerated. So this is the idea that the AI system are probabilistic and non-deterministic. Regulators should adopt a graded liability framework. The regulated entities should be liable for their artificial intelligence. But if a mistake is happening, and especially if it is a first time mistake, the supervisors and the regulators should tolerate the mistake. But if the mistake is happening again and again, then the regulated entity should be punished. This is the basic idea. Okay, so regulated entity must continue to remain liable for any loss that is suffered by the customers due to the AI that is developed by the regulated entity. But an accommodative supervisory approach should be taken by the Reserve Bank of India. Okay, there should be accommodative supervisory approach where the regulated entity has followed appropriate safety measures and such an incident reporting has happened. So regulated entity, there is a mistake that is done by AI. Regulated entity has recognized that mistake, has done the audit for that mistake, has reported that mistake themselves to the Reserve Bank of India. So Reserve Bank of India should have accommodative stance because the RBI has to understand that the AI systems are probabilistic, they are non-determinate. Okay, so basically if a first time mistake is done by the AI developed by this regulated entity, and if the regulated entity is recognizing its mistake, it is doing the audit itself as well as is responsive to the Reserve Bank of India and providing the has the safety mechanism. So the accommodative supervisory approach has to be taken by the Reserve Bank of India. This tolerant supervisory stance should be limited to first time offense only or one-off operations and denied in the event of repeated breaches that is happening or repeated negligence that is there or failure to take the remedial actions. So use flexible rules for holding the companies accountable for AI related issues, especially if the regulated entity is taking the responsibility, has taken the safety mechanism, has taken the remedial actions, has audited the mistake themselves, has responded to the mistake themselves, and this is a first time offense, then the regulated entity can be can be left by the Reserve Bank of India that, okay, this is the first time mistake, so we are leaving you, or we are not punishing you majorly, like in a good, like in a big manner, but for the more offenses that is done by the regulated entity, then the regulated entity should be constructed or restrained. Okay. Next is that AI institutional framework, a permanent multi-stakeholder. So the Reserve Bank of India should have a permanent multi-stakeholder AI standing committee. This should be constituted under the Reserve Bank of India. This is a multi-stakeholder AI standing committee to continuously advise the Reserve Bank of India on emerging opportunities and risk associated with the AI technology. So the committee may be constituted for an initial period of 5 years. That should have a sunset clause. That means this committee will end on what date. So that should also be mentioned. And it has to be seen that the built-in review mechanism should be there. So it should be seen that how the committee is working. So there should be a AI standing committee that can help the Reserve Bank of India to continuously understand that how the AI technology is developing, what are the emerging risks with this AI technology and such. So committee should be developed or should be constituted for a period of 5 years with a built-in review mechanism that the committee is working in a good manner or not. Okay. A dedicated institution should be established for the financial sector operating under a hub and spoke model to the national level AI safety institute. So there is a national level AI safety institute. So with this, a dedicated institution should be established for the financial sector for the AI. Okay, this is the idea. So set up a permanent expert group to help the Reserve Bank of India stay updated on the AI, and this permanent expert group or this permanent AI standing committee should be for a period of 5 years. Okay, so basically this is the idea. So basically there should be a permanent multi-stakeholders AI standing committee should be constituted under the Reserve Bank of India. So this is a permanent multi-stakeholder AI standing committee that should be developed. Now the committee may be constituted for an initial period of 5 years. After that, it should be seen, it should be reviewed, and after that it should be seen that the committee is working in a good manner or not. So initially it should be for a period of 5 years, but then it should be permanent so that there is the permanent update that is given to the Reserve Bank of India. Any confusion anyone has till now? Now next is capacity pillar. So in the policy pillar, there was adopted and enabling policies, enabling AI-based affirmative action where the regulators can lower the compliance, okay, but has to have the safety mechanism. AI liability framework, so the regulated entities should be liable, but if the regulated entities are taking, like they are doing the audit themselves, if AI is doing some mistake, the regulated entity is recognizing the responsibility and recognizing the mistake, so the regulated entity should be left in first stance. But if the compliance mistake is happening again and again, then the regulated entity should be liable more and should be punished by the Reserve Bank of India. So Reserve Bank of India should have accommodative supervisory approach, and there should be tolerant supervisory stance should be taken for the first offense at least, okay, in the case of AI, because AI is probabilistic and non-deterministic, and sometimes the regulated entities themselves do not know that how the AI will respond to certain actions. Okay, AI institutional framework. So there should be institutional framework that should be developed. That should be a permanent multi-stakeholder AI standing committee that should be established, but initially it should be for a period of 5 years to see if the committee is working efficiently or not. Okay, and there should be a dedicated institution should be established for the financial sector with the AI safety institute. So now coming to the next part, that is capacity pillar. Capacity has to be developed. Now capacity is being developed by the regulated entities. So capacity building within regulated entities, they should develop AI related capacity and governance competencies for the board. So C-suite means the CEO, the chief executive officer, the chief financial officer, the chief operating officers, they should be trained so that they are able to handle the problems related to the AI models and such. So the top governance body of a regulated entity should be trained in such a manner that they are able to handle the policies and they are able to handle the governance of the AI models and AI ecosystem. So the capacity building within the regulated entities. So they train the leaders and staff to build strong AI understanding and ethical use within the institutions so that the AI, the top leaders, they are able to develop such governance norms that is able to help the development of the AI the usage of the innovative AI, but at the same time mitigate the risk. Okay, so this is the idea. Structured and continuous training should happen, upskilling, reskilling programs across the broader workforce who use the AI. Capacity building for regulators and supervisors. So capacity building should happen within the regulated entities. Training, reskilling, upskilling should happen so that the AI models can be used efficiently within the regulated entity, within the banks, within the NBFCs that are using the AI. But at the same time, the regulators and the supervisors, the Reserve Bank of India, IRDI, PFRDA, the regulators and the supervisors in our country, they should also do the capacity building. Because if the banks, if the NBFCs, they are using the AI, or let's say the financial companies like the pension funds or the insurance companies, they start using AI. So the regulators should know that how this AI will work or how this AI can affect the country. Okay, so regulators and supervisors should invest in training and institutional capacity building initiatives to ensure that they possess adequate understanding of AI technologies and to ensure that regulatory and supervisory frameworks match the evolving landscape of AI. So the capacity building, the skilling, upskilling, reskilling, training should happen within the regulated entities so that they are able to use the AI efficiently. The regulators, supervisors, they should also have appropriate training in their organization so that they are able to build good regulations for the AI. That is boosting the innovation in AI but mitigating the risk of AI. This is the idea. So capacity building should happen for the regulators and supervisors also. Okay, so that the RBI may consider establishing a dedicated AI institute to support sector-wide capacity development. Next is framework for sharing best practices. So under the capacity pillar, there should be framework for sharing best practices. The financial services industry through bodies such as Indian Banks Association, the SROs, okay, self-regulatory organizations, the NBFCs, fintech companies, the banks, they can have their own SROs, right? So the financial service industry through bodies such as IBA or SROs should establish a framework for exchanging the information, because the AI model, it might be developed by a bank, it might be developed by a NBFC, but it can be used by the whole of the financial sector, right? So there should be a framework that should be established for exchanging the AI related use cases, lessons that have been learned with the past mistakes, as well as best practices, and promote responsible scaling by highlighting the positive outcomes, challenges, as well as sound governance frameworks. So basically, there should be sharing of best practices that should happen because AI is just developing. So if it is being used by a bank, the bank should share the information about the mistakes that has happened, the challenges that have been faced, the good usage of the AI, as well as how we can mitigate the risk. Okay, and through the IBA and SROs, they should develop such frameworks so that the best practices can be shared. So set up a platform to share the AI use cases and best practices, helping the industry grow responsibly together. Last point under the capacity pillar is that recognize and reward responsible AI innovation. So by the term itself, you should be able to understand that it is said that the RBI, the regulators and industry bodies such as the IBA, self-regulatory organizations, they should introduce structured programs to recognize and reward responsible AI innovation in the financial sector, particularly those that demonstrate positive social impact, that is furthering the financial inclusion, that is reaching to the underserved and unserved areas. So that is creating positive impact and embed ethical considerations by design. So this is the idea under the capacity pillar. So we have discussed the infrastructure pillar, the policy pillar, and the capacity pillar under the innovation segment. Any confusion, anyone? Okay, moving forward. So now here, these are the medium term. These are the medium term recommendations. That means these have to be met in the medium term in the coming period of 2 to 3 years, let's say. Okay. Next is governance. Now risk mitigation framework. Risk mitigation framework, in this we have governance. Okay, in this we have protection and assurance. So risk mitigation means mitigate the risk. How can we mitigate the risk? If the governance norms are very strong and they are very good within the regulated entities. So within the regulated entities, the governance pillar should be strong. So governance pillar, board approved AI policies. So all the regulated entities, the banks, NBFCs, fintech companies, they should have proper board approved AI policy. To ensure the safe and responsible adoption of AI within the institutions, the regulated entities should establish a board approved AI policy which covers key areas such as governance structure, accountability in case of anything happens, anything wrong happens and the AI model is like creating some problem, as well as risk appetite, operational safeguards, auditability, the AI should be auditable, as well as consumer protection measures, AI disclosures, model life cycle framework, that model design is happening, model development is happening, model deployment is happening, the model is deployed. Then there is some problem that is coming in the model that is known as model drift. So if AI model performance reduces, its fairness reduces. So that is model drift. So if model drift is happening, so all of this has to be taken consideration of, and the governance norms should be prepared for all these levels: model design, model deployment, model development. So model design, model development, model deployment, model drift, that is the performance of the model is reducing, the AI model performance is reducing. So in the case of model drift, what actions will be taken by the regulated entity? So it has to be laid down, the framework has to be laid down. And liability framework, that in case anything happens, how the liability will be established, that which segment has done the mistake, okay, in the regulated entity. Industry bodies should support smaller entities. Industry bodies means Indian Bank Association, self-regulatory organizations. They should support smaller entities with an indicative policy template, because sometimes the smaller entities, they do not have enough resources to make the whole framework and to prepare the whole framework for the governance of the AI responsibly. They might be developing the AI, but they do not have enough resources to focus on the governance norms also. So IBA and SRO should provide the indicative policy template for the smaller entities. This is the idea. So every institution should have a comprehensive AI policy approved by top management that covers all the major risk and governance areas. Support smaller players. So the industry institutions like the IBA, SROs, they should support the smaller players with ready-to-use AI policy templates for their governance structure. Next is data life cycle governance. Now, data life cycle is there. Like there is the model life cycle, that the AI model is being developed, it is being deployed. Okay, it is being like model drift is happening. That means the performance of the model is reducing. The performance of AI, the fairness and accountability is reducing for the AI. The performance is reducing of the AI, the accessibility and the fairness is reducing for the AI. Then model drift is happening. So model has to be decomposed, model has to be removed. Okay, so this is the life cycle of the model. This is the life cycle of the AI model. Similarly, the data life cycle is also there. First, the data is collected, then the data is accessed for the usage, then the data is used. So once the data is collected, it is assessed, then it is used, then it is kept with the regulated entity, it is retained. After the retention, there is the deletion that is required also. The data has to be deleted also. Okay, so this is the idea for the AI systems. Now these frameworks, so data lifecycle, this is the data lifecycle. Okay, now these frameworks should ensure compliance with the applicable legislations. So the applicable legislations have to be applicable. Okay, so this is the idea that institutions, they must manage AI related data responsibly throughout its life cycle. So throughout the life cycle of the data, the institutions have to manage the data properly. Okay, in line with data protection laws. So in line with the data protection laws. Okay, now this DPDP, it is the digital personal data protection. So digital personal data protection laws are there. Okay, so this is the idea. So in the whole life cycle of data, from the level it is collected, access, use, retention and the deletion is happening. So in all the life cycle of data, the framework should ensure the compliance with the applicable legislation such as the digital personal data protection. Okay, so this is digital personal data protection act has to be like followed when the data is collected and used in the digital manner throughout the data life cycle. Any confusion here? So in the whole life cycle of the data has to be protected. So there is data, there is digital personal data protection act that has to be followed, and the other legislations have to be followed in case of data. Next, coming to the next one, that AI system governance framework. So in the governance ones, we have discussed that board approved AI policy should be there, data lifecycle governance policy should be there, then AI system governance framework. So the build governance system to manage the AI models throughout their entire lifetime. Like the AI models also have a lifetime. They are developed, they are deployed, some model drift happens. So in the whole AI model lifetime, there should be governance system that should be developed that is able to use the AI model in a good manner, and then the AI model has to be disposed in a good manner also. So regulated entities must implement robust model governance mechanism covering the entire AI model life cycle, including the model design, development, deployment, decommissioning. Decommissioning means when the model drift happens, when the model's performance reduces. So after that, the model has to be decommissioned, it has to be dissolved. Okay. So model documentation, validation, ongoing monitoring, including mechanism. So all of this has to be laid down. That is the model documentation, how it was prepared, how it was validated, how the checks happened. So it all has to be laid down clearly. Regulated entities should also put in place strong governance before deploying autonomous AI systems that are capable of acting independently in financial decisions. So basically, the AI system that are able to take decisions themselves, especially in the financial sector domain. So there should be more checks that should happen for such kind of AI system. Okay. Given the higher potential for real world consequences in the case where AI systems are capable of taking the independent decisions, in this case there is higher potential of risk, or there is higher risk that is involved, or higher consequences that are involved. So this should include human oversight, especially for medium and high risk use cases. So this is the idea, that build governance system to manage the AI model throughout its life cycle, from the design, deployment, development, decommissioning. The governance norms should be proper, as well as regularly monitor and update the AI models to keep them accurate and fair, so that the model drift do not happen. Model drift means when the model's performance reduces, its fairness and accuracy reduces. Then it has to be decommissioned, it has to be dissolved. Regularly monitor and update the AI model to keep them accurate and fair. So this is the idea, as well as in case the models can take AI systems that are capable of acting independently and taking the independent decisions, in this case they have to have the human oversight. Okay, you can see that AI is taking its own decisions, so that will not be good for the financial sector. Okay, product approval process. So a regulated entity should ensure that all AI enabled products and solutions are brought within the scope of the financial product approval. So basically, all AI products must go through the formal approval and risk checks before the launch by the regulated entity. So these are the governance norms that has to be followed for the AI. Board approved AI policy, data lifecycle governance, the AI system governance framework that is governing the AI in its whole lifetime, as well as looking after the AI that can take the independent decisions. Product approval process should also be proper. Okay, so there should be proper product approval process that should be there. Next is the protection pillar. Now we have moved from the governance to the protection, and the last one is assurance then. So protection pillar, you can understand that the customer protection should be there. Customer protection should not be risk in any case. Okay, institutions must protect the customers by being transparent and fair and offering the complaint channels. The proper complaint channel should be there. Cybersecurity measures have to be taken. Regulated entity must identify potential security risk on account of their use of AI and strengthen their cybersecurity ecosystem. So assess and fix security risks that come with using the AI. This is the idea. Okay, so dynamic threat detection should happen and response mechanism should be there. Now the next one is red teaming. Red teaming basically means, red teaming is a structured stimulation. So it is a real life scenario is created. So red teaming, it is a structured simulation where the real life scenario is created, where the AI systems are tested for weakness in the real life scenario. That in the real life scenario, if a external attack happens, or if the data is being attacked and such, so then how the AI will react. Okay, so red teaming is a structured simulation where AI systems are tested for weakness, like adversarial attacks, the external attacks that happen on the AI ecosystem, bias, that if the data is biased, or how the AI model will work in the bias scenario, as well as security loopholes, to provide a comprehensive assessment of the security capability of the information system and organization. So in the case of a red teaming basically means stimulation that if the AI is under the weakness, so what will happen? Okay, so regulated entity should establish structured red teaming processes that span the entire AI lifestyle. When it is being developed, when it is being deployed, the red teaming or the structured simulations should happen, real life scenarios should be taken, and the AI should be tested again and again in all the processes. In its whole lifetime, AI has to be tested again and again, again and again. So the frequency and intensity of red teaming should be proportionate to the risk level. So the more the riskier the AI model is, the more it is integrated with the people and with the ecosystem of the financial sector, the more the testing should happen, the more red teaming should happen. Okay, so this is the idea. Trigger based red teaming should also be there. That means if there is some new function that is being introduced in the AI, if there is some new data type that is being introduced in the AI model, so again, this is the trigger. Trigger means something change is happening in the AI ecosystem. So as soon as the change happens in the functioning, in the data structure, so again the red teaming, that is the structured simulation, the testing should happen of the AI ecosystem. So trigger based red teaming means that as soon as some changes happening in the AI ecosystem, the trigger is created and the there is some testing that is required. Okay, next is business continuity plan. So business continuity plan should be there, that if AI has to be dissolved, or if AI has faced model drift, that means its accuracy and fairness have reduced, that means its performance have reduced. So in this case, when AI is not able to work properly, then the manual like process has to become manual, or from the AI ecosystem the process has to be shifted to manual. So how faster the process can be shifted, how smoothly the process can be shifted. So this is the business continuity plan. So update the business continuity plan to cover the AI failures. In case the AI fails, then what happens? Then how fast the processes can be changed from the AI to the manual without any major problems, and run test for the fallback mechanism, that if the AI fails, that what are the fallback mechanism, how smoothly we can go to the fallback mechanism to ensure resilience against AI model failure. So business continuity plan should be there, and there should be testing that should happen for the fallback mechanism. Shut down your AI system and see that how fast your employees are able to adapt and fall back to the fallback mechanism, and they are able to go to the fallback mechanism. Okay, AI incident reporting and sectoral risk intelligence framework. So again, in the protection pillar, there was consumer protection, cybersecurity measures, red teaming, that is the testing that happens, business continuity plan, and the last one is AI incident reporting and sectoral risk intelligence framework. So AI reporting, if any mistake is happening, if any problem is coming, so that has to be reported. So regulators should set up a fair and transparent AI incident reporting system where the regulated entities can report if there is any problem that initiated in the AI, and encourage timely disclosures also. So financial sector regulators should establish a dedicated AI incident reporting framework where the regulated entities and the fintechs, they can provide the report about any AI incident, that AI started to provide the data by itself, it started to provide wrong answers and such. So in what conditions it happened, encourage timely detection and reporting of AI related incidents, and encourage the disclosures, that you have to disclose if a problem comes. Okay, last one is assurance pillar. Assurance pillar means that okay, AI has been used, now the auditing should happen of the AI. Okay, so AI inventory within regulated entities, sector-wide repository. So a repository has to be developed in the short term. The repository has to be developed where all the regulated entities are notifying that okay, they are using which models and how they are using it, how often they are using it. Okay, so there should be a sector-wide repository that should be created in regards to all the regulated entities that are using the AI ecosystem. Okay, so AI inventory, so internal, so regulated entity should maintain a comprehensive internal AI inventory. So regulated entity should have the internal AI repository. That means a single regulated entity is using which AI tools, which AI mechanism, and which AI models. So in internal AI inventory should be there, that includes all models, use cases, target group, dependencies, risk, grievances for the AI models. Okay, update, this should be updated at least half yearly, and it must be available for supervisory inspection and audits. In parallel, the regulators, so internally the regulated entity should maintain for each entity, okay, the regulated entities for themselves, they should have the internal database, that which models they are using, which use cases, for which target groups, what are the risk involved for the different models. Let's say one regulated entity has 4 AI models that they are using. So all these models have to be notified. Now this is the internal like internal information that they are keeping, the regulated entities. Then the regulators should have a sector-wide information database also, where all the regulated entities are notifying that okay, which models they are using and such. Okay, so the regulators they should establish a sector-wide AI repository that tracks the AI adoption trends, concentration risk, systemic vulnerabilities across the financial system. Okay, this is the idea. Due anonymization of entity details. Now it has to be, so the RBI or the regulators will have the sector-wide information that which regulated entity is keeping which models, but the anonymity has to be maintained so that the other regulated entities are not able to like identify and such. Okay, so anonymity has to be maintained in the financial system. So basically regulators should establish a sector-wide AI repository that tracks the AI adoption trend, concentration risk, systemic vulnerabilities across the financial system with due anonymization to the entity details. So maintain internal AI registers for the regulated entities. Sector-wide database has to be maintained by the regulators for transparency and risk monitoring. Next is AI audit framework. So AI audit framework should be developed. That means audit is happening of the AI so that comprehensive risk-based calibrated AI audit can happen. Internal audits, that means the regulated entities doing the internal audit is checking the AI. At the first level, regulated entities should conduct internal audits proportionate to the risk. More risky, so higher internal audits are required. Then third-party audits are required for the more risky or complex AI use cases. For high risk or complex AI use cases, there should be third-party audits that should happen. And then periodic review. The overall audit framework should be reviewed and updated at least biannually to incorporate emerging risk technologies and such. So multi-layered AI audits to ensure safe, fair and compliant AI use. So in the assurance pillar, there should be the repositories that should be maintained, internal repositories, internal registers, as well as the sector-wide register or the sector-wide information, and the repository has to be maintained by the regulator. Then audit framework, there should be AI audit framework. Next is disclosure by regulated entities. So regulated entities should have the proper disclosure. So they should have the disclosure in their annual reports. Regulated entities should include AI related disclosures in their annual report and website. Regulators should specify an AI specific disclosure framework to ensure consistency, adequacy of information across institutions. AI toolkit, this is the last point. So AI compliance toolkit will help regulated entity validate benchmark. So AI compliance toolkit means compliance. AI rules have to be complied with. So AI compliance toolkit will help regulated entity validate, benchmark and demonstrate compliance against key responsible AI principles. So AI principles are fairness, transparency, accountability and robustness. So these are the 4 responsible AI principles, okay, such as fairness, transparency, accountability and robustness. So AI toolkit basically means AI compliance toolkit. This will help the regulated entities validate that are they having the fair AI, transparent AI, accountable AI, robust AI. This is the benchmark. So a benchmark has to be said that this is the best kind of AI. So are the regulated entities are having the AI use case or AI model that is near to this benchmark. Okay, the toolkit should be developed and maintained by a recognized SRO or industry body, that is the Indian Banks Association or the self-regulatory organization. Okay, so this is the idea. So disclosure by REs, so ensure transparent AI disclosures to the customers, investors and regulators, as well as provide regulated entities with a standard tool. Provide regulated entities with a standard tool to measure and prove the AI compliance. So AI compliance toolkit is basically the SROs or the Indian Bank Association, they are providing a standard tool that okay, your AI model should be in regards to this benchmark, should be related or it should be near to this benchmark. This is the idea. Okay, so these were the 26 recommendations. So under the infrastructure, we have seen the financial sector data infrastructure, AI innovation sandbox, incentive and funding, indigenous financial sector specific AI models, integrating AI with DPI. Then there was policy. In the policy, the regulators are like adopting certain policies, that is adaptive and enabling AI based affirmative action, AI liability framework, AI institutional framework and such. Then there was capacity building has to be done by the regulated entities as well as the regulators. They should have the framework for sharing best practices and reward recognition should happen. Okay, So recognition should happen and reward should be given for the responsible AI innovation. So recognize and reward the responsible AI innovation. Then there was the governance norms that has to be developed internally by the regulated entities. Then there is the protection that has to be done for the customers, the cyber security, red teaming, that is testing. Red teaming basically means real life testing that is required, business continuity plan, AI incident reporting and such. So this comes under protection. Assurance basically means audits, disclosure, AI toolkit that is providing you a benchmark that how your AI model should be. So benchmark AI toolkit is providing you the benchmark that how your AI model should work, how your AI model should be. It should be transparent, fair and such. Okay. AI inventory within regulated entities. So within regulated entities, they should maintain the AI inventory, that what is the AI that they are using, what is the use case, what is the target group and such. And with the sector-wide repository should also be there, so that the regulators are actually able to know that what are the AI systems that the regulated entities are using, what are the vulnerabilities, what are the problems, and what are the risks, what are the good things that are involved in this AI. Okay? So this is the idea that under innovation there are 3 pillars, and under the risk mitigation there are the 3 pillars. Under these 6 pillars there is 26 recommendations. That is the idea. Yukta, you can ask your doubt in the comment section. Okay. Of the new video, because I usually see the comments for 2-3 hours or like 6 hours, sometimes one day. So within one day, if you can ask your doubt, that will be good. Now this is the first question that you have to answer. This is the first question. Which of the following are part of the 7 sutras outlined by the committee to guide AI adoption in the financial sector? So which of these are under the 7 sutras? Okay. So this is the idea. Next is, which of the following is not a recommendation under the infrastructure pillar? So I have told you that under the infrastructure pillar, what are the recommendations? At least heading you must know about. So infrastructure means infrastructure. Capacity building means capacity building is happening in the regulated entities and such. Protection means that we have to protect the customers, the cyber security threats should not be there and such. Assurance means that auditing should happen and final checks should happen. Okay. So these are the different pillars that have different norms within them or recommendations within them. Like the governance, a pillar has governance norms within it. Okay. So this is the basic idea. As well as it is said, so you have to tell me that in the infrastructure pillar, which of the following is not a recommendation under the infrastructure pillar? Any confusion anyone has now? Is there any confusion in the repositories? Internal repositories have to be maintained and the sector-wide repository will be maintained by the regulator. So internal repositories will be maintained by the regulated entity and the sector-wide AI repository that tracks AI adoption, concentration risk, systemic vulnerabilities. This sector-wide AI repository will be maintained by the regulators, but the regulators will not maintain the anonymity, because the regulators do not want to showcase the whole world that, okay, what are the vulnerabilities that we have in our AI ecosystem. That's why the anonymity should be there. Okay. Any confusion, anyone? All clear? All clear. Nice. Thank you, everyone. So I have provided, see, for each and every point or for each and every recommendation, I have provided a single line, so that when you are revising, you are able to take the help of these single lines to understand the whole idea. Okay. So basic reading can be done of all the recommendations, as well as these single points can be studied, so that at last you are able to revise in a good manner. This is the idea. Okay, so let me see. Basically, the capacity pillar says that capacity development has to happen, capacity building, because if AI models are being developed, with the development of AI models, the capacity of the regulators, the capacity of the regulated entities should also be developed. Let's say we have developed a very good model, but only the developers know about the model. The users, or let's say in the regulated entity, is using a AI model that is developed by some innovator, that is developed by some entity or the developers. Okay. Now the people that are using this AI model within the regulated entity, they should be trained. Without the training, without the proper skills, how are you going to use the AI model? Like we use the ChatGPT, but for the using of the ChatGPT also, there are many trainers that give you the training. that okay, you have to give this kind of prompt or you have to give that kind of prompt. Okay, so for any capacity building basically means if you are using the AI model, the developers have developed it, but you are using the AI model, so the capacity development should happen, so the training, the skills, the upskilling should happen, so that you are able to use the model in a good manner. Like, have you heard about napkin? Napkin is also a kind of AI model. Okay, so if the developers have developed it, now many of the institutes, they use the napkin, so the people have to be trained properly in this napkin AI model or in this AI, so that they can use it properly. So that is capacity development. Okay, this is the idea. Got it? Good morning, Reena. Is it clear, Guru Raja, that for using the AI model, the capacity has to be developed, the training has to happen. So infrastructure is infrastructure development for AI models. Policies should be there for like the mitigation of risk, for the usage of AI. Capacity development means capacity should be there with the human beings to use the AI. The regulator should have the capacity to understand the AI technologies and to provide the rules and regulations for them. This is the capacity development. Okay, then framework for sharing the best practices, so that the capacity can be developed in the whole of the community of the financial sector. Recognize and reward the responsible AI innovation, so that the further rewards are given to the people that are using the AI models in the best possible manner. Governance, then protection, and then the assurance, that is the audit and such. Clear? Okay, thank you everyone. Thank you for joining today's session. Then see you in the next session, and this is it for today. A question can come from the AI models. Now, in the perspective 360-degree session, I will ask Jaskaran sir that in the next session he can take a question on the AI ecosystem, because AI ecosystem, there is again various new developments that have happened in the AI ecosystem under the Reserve Bank of India or under the government. So RBI and the government have taken various means to further develop and boost the AI usage in the country. So what are the recent steps that have been taken? So you should be aware about that, because a question can come in this topic. Again and again, you can understand that a hot topic becomes before the examination. AI is right now the hot topic. A question can come from this, either in finance or in ESI segment. Okay, so I will ask Jaskaran sir to take a perspective 360-degree session, that is a descriptive answer writing session on the AI topic, so that you are able to understand that what are the recent achievements and recent steps that have been taken by the RBI or the government in this domain, in the AI domain. There are various different steps that have been taken other than this free AI committee also. So I will ask Jaskaran sir. And in the free AI committee, I have discussed the important points with you. But in this committee, there were previous steps that have been also discussed in regards to the AI development. Okay, so in the next session, sir can take the AI, this topic for answer writing. Okay, so this is it. Thank you everyone. Thank you for joining.